Once Warren Buffett said, "Big opportunities in life have to be seized. We don't do that many things, but when we get the opportunity to do something that's right and big, we have to do it." What are exactly those big opportunities Warren Buffett is speaking of? Can you imagine your life where instead of working your 9-to-5 job to barely survive, you can build your wealth pretty much passively and stop worrying about money at all? Every one of you using this strategy can make it so far that you will never have to work a single day again. If you are smart about your financial future and want to be able to provide best life for you and your loved ones, you will definitely like this video. It's simpler than you might think. Even Warren Buffett took advantage of it to become one of the richest men in the world. If you want to, keep watching this video, and it starts with this. Dividend investing quickly became one of the most searched ways to make a passive income. And there are more than one reason for this. First, you don't need a bank to start. You can start with as low as $100 per month. Also, this strategy has unlimited potential and can make you very wealthy. Warren Buffett has several stocks that he owns that pay out dividends. He even once said, "I believed in dividends and it's time for you to start believing in them too." I'm positive that you are looking to at least making $40,000 per year. That's exactly what we are going to show you in this video. Here are a few types of income, active and passive. Active income is type of income that you have to earn in your day job, for example. It's hard-earned income where you have to trade your time for money. Second, passive income is type of income where money works for you and generates you income without additional active work. In ideal scenario, person should use his active income to grow the passive one. It can be achieved by taking certain percentage of your paycheck every few weeks and placing it into dividend-paying stocks. Few of you might have thought about real estate too. However, to delve into real estate investing, you really have to have big sum of money ready in your bank account. Of course, here are ways to invest in real estate cheap via different investments. We are going to talk about those briefly further into the video. In this video, we are going to talk about dividend investing, where you need $100 or less to start. As Warren Buffett says, that we buy dividend stocks to make a consistent stream of passive income that helps to cover at least our basic needs. Let's find out how much invested you need to achieve this exact goal. Let's take, for example, Coca-Cola company, which is really loved by Warren Buffett and known by pretty much everyone. It is quite stable company and have a big capital. This type of company have few options what to do with excess cash. Company can save for emergency situations, reinvest profit back to the company, or pay out it as dividends to shareholders. If we are taking well-established company like Coca-Cola, sometimes the best thing the company can do with the money is to pay out it for shareholders. Moving forward, Coca-Cola has long track record of paying dividends to its shareholders as well. Currently, it has yearly dividend yield of 3.04%. Dividends usually are paid quarterly, which means you will get paid 4 times per year. But what amount of dividends paid you can expect if you own 1 share of Coca-Cola stock? Currently, if you own 1 share of Coca-Cola, your paycheck per year from dividends would be $1.84. It's not a gold mine by any means. However, what happens when you have 1,000 shares? You would get paid $1,840 yearly. And to achieve our discussed goal earlier of $3,300 per month, you would need $1,295,000 invested. Seeing this amount needed probably makes you give up on investing overall. But keep watching and together we will discuss how you can speed up the process. One of the biggest advantages of owning a stock that the company will never stop moving. Profitable and good company over a period of time will most likely appreciate in value. In other words, if a share value grows, your invested money grows too, thus making your dividend payouts bigger. For example, yearly dividend payout for Coca-Cola in 2013 was as little as 28 cents per share. Looking forward to 2023, it's 46 cents per share, which is almost double as it were in 2013. The best thing is that the price of share itself increased 60% since 2013. If you're still not sure, I will quote Warren Buffett. He said, "If you want a recipe for getting rich in the stock market, here it is. Find stocks with above average appreciation potential and safe and growing dividends. Then buy them at attractive prices." You might be convinced now, but you're still wondering, maybe here is faster way? That's exactly what we are going to cover, so keep watching. Now, let's see what other stocks Warren Buffett owns right now and analyze their dividend rates. We already discussed about Coca-Cola. Let's see others. Citigroup Inc. currently has 4.5% dividend yield. This means you need $875,000 invested to reach your goal of $3,300 per month. Another owned company is Vitesse Energy with the dividend yield of 8.68%, which means you only need $450,000 invested to reach your goal of $40,000 yearly dividend income or $3,300 monthly income. Now, after we discussed these examples, you might be thinking it's easy. We just need to find a highest dividend yield stocks and invest our hard-earned money. That is mostly not the best choice, and even if you want to make the biggest ROI or return of investment, you still have to make smart decisions. Even if the high yield looks more attractive at the first glance, but the reality is quite often those high yield companies are not as sustainable as you would want. These companies could even have 5 minutes left until bankrupting. Imagine, you have a lot of money invested into a company with a high dividend yield, for example 10%, and you are enjoying your fat payouts. However, this type of company in the future could easily go bankrupt because of bad money management. Even if the company makes good profit, every healthy company first thinks how to keep growing or even sustain current rate of profit before paying any massive amounts of dividends. If this high-yield dividend company bankrupts, you can lose big percentage of your money, which means even few years of big dividends will not be worth it, since in the long run you will lose a lot of value of your investment. I like to see high dividend paying companies this way. High dividends might be attractive, but more often than not, these types of companies are hiding something which are not necessarily good things. If you want to structure everything in your head, just listen to this quote of Warren Buffett. Time is the friend of the wonderful company, the enemy of the mediocre. But what if you are not interested of investing in stocks anymore because of the effort needed? Here's an option for you too. And it's of course ETFs. ETF stands for Exchange Traded Fund, which is basically a basket of selected stocks and is sold as the one group. Nowadays, we have a lot of different ETFs to choose from, but let's discuss about few of them right now. First is called VYMI, which is primarily has its focus on the companies with higher dividend yields. At this current moment, it pays 4.53%, which means you would need $875,000 invested to reach your $3,300 per month goal. Another decent option is another high dividend yield focused ETF. It's FDVV, which currently has a dividend yield of 3.8%, and it means you would need $1,035,000 invested to reach your $3,300 per month mark. One of the biggest advantage of investing in ETFs versus regular stocks is that it's way more effortless investing. That's because, since ETF diversifies a portfolio pretty much for you, you don't need to spend endless hours analyzing single stocks. However, even if that's the case, you still should check listed companies in the ETF you are considering to invest. This will let you understand risks involved, possible results, and overall what you can expect. Now, let's talk one more option available to reach our discussed goal of $3,300 per month. This type of investment vehicle will definitely be liked by the audience who want to evolve into real estate investing but don't have the capital needed yet. Of course, we are talking about REITs, which stands for Real Estate Investment Trusts. REIT is liquid investment type and can be bought and sold when the market is open, same as stocks. One major difference between REITs and other stocks or ETFs is that REITs invest only in real estate, meaning everyone can invest in real estate indirectly with as low as $100. As well, REITs have a requirement by law to pay at least 90% of your profits to shareholders. This means stable and high dividend payouts for you. First, let's talk about popular REIT XLRE with a dividend yield of 7.44%, which means you need a total of $520,000 invested to get a $3,300 per month passive income paid as dividends. Another popular one is iShares Cohen & Steers REIT with a dividend yield of 5.86%, and with this REIT you would need $665,000 invested to meet your goal. Now, you might be overwhelmed by all these huge sums of money and realize you don't have that much. However, here's one secret to make everything faster. Talking about previous example of Coca-Cola stock. Currently, as we mentioned before, it has 3.04% dividend yield, and you would need $1,295,000 invested to reach $40,000 of yearly or $3,300 monthly income. However, this calculation was assuming you would put that much money today. That's not how dividend or any investment works, and that's certainly not how Warren Buffett made his bank. Dividend investing is more like a marathon rather than a sprint, meaning you should consistently put your money into your researched investment. This means every month or every few weeks you are buying few shares of Coca-Cola. For example, you start with 10 shares first month, then second month you put 10 more, etc. Over the course of 10 years, you would have annual income of $3,009, which is already decent. If you were buying 20 instead of 10 shares per month, after 10 years you can expect to have $5,975 yearly income from dividends. Now, let's talk about last component which will help you grow even faster. It's a snowball effect of compound interest. In other words, instead of cashing out your dividends, reinvest it back into your dividend stock. This will let you grow way faster. Now, let's calculate what is the difference between investing in 20 shares per month for 10 years but now with dividends reinvested. This way, you make an extra $1,000 per month from putting your dividends back to the stock. Understand that your assets are constantly growing as well, which means the stock price will be higher as well, which basically will mean fatter dividends paid for you. This is how you can reach your goals of these huge sums of money invested we talked before, even if you are a regular guy in an average job. One more thing is left to talk about, is that dividends are considered as income, which means that is taxable. Keep that in mind. So, if your goal is to live off of dividends and achieve financial independence, you should follow these steps. Decide what is the most attractive investment vehicle from this list to invest. Is that stocks, ETFs, or REITs? When you get paid from your active day job, automatically invest certain percentage of your income per month into your desired investment vehicle. Always reinvest your dividend money, since this will ensure your money is working for you. This strategy also will help you to reach your goals way faster. Also, remember, you must pay taxes on dividends that you made. And last thing I would like you to take away from this video is, it starts slow, but stay consistent, cause before you know, you will have a huge portfolio of dividend-paying assets built and can reap the rewards in the shape of passive income from dividends. Now, since you understand the strategy overall, I would suggest you to watch a video about fastest way you can start living off of dividends. Thanks for watching. If you found any value, like and subscribe.